Halo, selamat malam Bapak Ibu dimanapun Anda berada. Take care and also stay safe. Malam ini bersama dengan saya, Kunardi Halim, founders dari Happy Business Club, dan juga Pak Johan yang ada di seberang. Kita malam ini live. Dan malam ini kita ada tamu spesial dari Manila, Mr. Jason Mariposa, analis kita, untuk boleh memberikan kita sedikit update ya. Sebenarnya ya lumayan update untuk perkembangan-perkembangan terbaru, karena sebenarnya ini secara investasi, secara saham, sebenarnya ini satu momentum yang sangat bagus. Mungkin ini jarang-jarang terjadi. Memang kita tidak mengharapkan, sekali lagi kita tidak mengharapkan terjadinya virus corona bisa mewabah, tetapi sekarang yang sudah terjadi adalah market turun drastis di mana-mana di seluruh dunia termasuk di Indonesia. Dan hari ini IHSG sudah ditutup di IHSG di 4.690-an ya. Wow. Dan ini sebenarnya ya sudah sangat rendah ya, sudah sangat rendah. Nah, tanpa berpanjang lebar, mari kita dengarkan presentasi terlebih dahulu dari Jason, kurang lebih 15-20 menit. Nanti setelah presentasi, silakan nanti jika ada pertanyaan nanti akan dijawab oleh Jason, dan kalau yang tidak mengerti nanti kita akan coba terjemahkan dalam bahasa Inggris. Ya, okay. Jason, please, the time is yours.
Okay, so hi guys, please take care. Let's stay at home and stop together. Let's beat this virus.
Yeah.
Okay, so today, I don't know. I think there's no other word to describe what's happening now.
Yeah.
Aside from market crash, it's scary. Okay, but I think that we are gonna get scared today. But I think that once in a lifetime opportunity is opening up. Trust me.
Yep.
So excited.
We never seen anything like this before.
This is the first time I'm experiencing it like this. Yeah, but I have read everything. I have read the history of the stock market, so this is actually not new to me, but the first time to experience.
Yep.
So I think that global markets are crashing and we're in a bear market. Okay. So if you look what happened in the U.S. market, so we always focus on the U.S. market when you look at the global markets, because of course it's the biggest stock market in the world. I think around 60% of global equities is U.S. markets. Okay. Yep. And usually, if something happening in the U.S. market, it affects everyone. Okay, that's why we always look at the U.S. market first. Okay, so this is the U.S. market for the past 15 weeks. As you see, we have had a 27% decline in just 3 weeks in the market. So it's incredible.
It's big.
Okay? It's huge. Okay. And if you look at the indicators, I think that everyone is really, really scared today. Okay, so there's this one indicator down here. It's called the VIX, VIX. Okay. Can you see my laser pointer?
Yes.
Okay. For the VIX, okay, this is an indicator that shows the stress in the equity market. Okay, it's also called the fear gauge. Okay, every time it's above 30, means that people are scared. So right now it's at 75.
It's like the 2008. Wow.
Okay. The highest since 2008. So people are very scared. Okay. So there's another indicator. This is for the corporate bond market. So if this thing is spiking, it means that people are scared, very scared of the corporate bond market. So now it's the highest since 2015. Okay. So if you look at here, this is the fastest sell-off all-time history.
My goodness.
The fastest. You know what, in the right here, we are having the biggest daily swings in history. Okay, the other day, down 9%. Day after that, up 9%. Today, the market's going to be opening down 9%, US market. Okay, so it is getting crazy out there. Okay, okay. So if you look at this is Germany. Okay, look at that.
Oh my goodness,
34%
crazy!
down in just a few days, guys. Lowest since
My God.
2016. Okay, this is United Kingdom.
Wow.
31.
My goodness.
Okay, lowest in I don't know how many years already. Okay, everything is collapsing. Okay, look at Japan.
Oh my
31%.
God.
It's like a bomb exploded in the stock market. Okay, this is Hong Kong. Okay, this is Philippines. 40% down in just a few weeks. Okay, this is Thailand. 44%.
Wow.
This is Indonesia. 27%.
Yep.
Okay, so yeah, I don't know. The market got infected. Okay, this is like a nuclear bomb exploded in the market. Okay, so I have this table here to summarize what happened. Okay, it's a sea of red out there. Everything is red. Crazy, crazy. This is crazy. Okay, so I have here the percentage return, right? Week on week, 1 month, 3 months, year to date, 1 year. Everything is red. Okay, so putting this in a big picture context, okay, I think we're definitely starting a bear market. Okay, and this I think is one of the most unusual bear markets ever. Because if you remember that, I keep on repeating this that interest rates are zero everywhere. Okay, yet we are having a liquidity problem. Okay, it's like the liquidity in the market disappeared. Okay, so we have limited financing available. Okay, why? That's because everything stopped. Okay, it doesn't matter if you have free money, if you have zero interest rates. Okay, there can still be a market crash because everything stopped. Okay, look at Italy, lockdown everywhere, no flights, no going to the malls, no going out of your house. Okay, so what happened is that even though it's very cheap to borrow money, okay, companies are having problems. It's because the cash flows of companies collapsed. Okay, cash flows of companies collapse, okay? And everyone needs money today. Okay, so you have an environment where everyone needs money. Okay? Okay, and if this takes a long time to recover, I think we're gonna see a lot of bankruptcies globally. Okay, and those bankruptcies are what causes markets to crash. Okay, because of lack of liquidity in the market. Okay, and I think it's very clear right now. So if you look what happened the past few days, right? All of the central banks are cutting rates, but it's not stopping the market from going down. Okay? It means that the system is, there's a lot of liquidity. Okay. Okay, so I think that the coronavirus is multiplying exponentially. Okay, at this point, it's already uncontainable. Okay, meaning you can't stop it. You can only slow it down. Okay, you can only slow it down. Okay, so if you look at what's happening globally, okay, so this is just the total confirmed numbers. Okay, if you read online, there's a way to compute the true number of cases. Okay, this is just reported numbers. Okay, I think this is up to the real number can be up to 10 times this. So 10 times, even 100 times. I won't be surprised if there's already a billion people infected out there. Okay, so if you know what's been happening recently, right? So this is China. China has been successful in slowing down the rate of increase in the infections. Okay, China was successful because they locked down early. Okay, they locked down the system early, so it stopped everything from going up. Okay, but what's been happening in the past month is that globally, you see this huge increase, okay, in infections. The global numbers already surpassed China.
Hmm.
Okay, did anybody cough?
The novel coronavirus outbreaks.
Careful.
Nope.
Okay, so you're seeing this exponential growth in global infections, and it's accelerating. Okay, so some tweets that the World Health Organization is very concerned, okay, by the spread, by the severity, and lastly, by the inaction. It's like nobody cares. They're very concerned about this.
Yep.
You see how contrast, right? You saw that China, you saw that Singapore, Korea, Taiwan, they move very, very fast. Okay, they already controlled the increase of the infections. They have flattened the curve. Okay, then you can see the contrast in Western, most developed markets like Europe, like US, Philippines, even I'm sorry to say Indonesia. It's acting very, very slow. Okay, that's why
Yeah, we are still debating.
yeah. While you're debating, and this is really
My God.
exponential. Every day you wait, it's dangerous.
Yeah, Italy got it in like a huge number in like in two weeks.
Yeah, look at this. This is just 3 weeks, right?
Yeah.
25,000.
Yeah.
25,000, that's, as I said, that's only the reported ones. Most likely the real number is 10 times this one, 250,000. Okay? Okay, and I think US this is obvious, they're behind, they don't care, they're downplaying this, okay? You know this tweet from Trump, he said it's just like the flu.
Yeah.
It is March 9. There's only 500 cases. Okay, he's waiting for it to explode before he becomes concerned, right? Okay. Look what happened to the NBA. You guys heard about this guy, right? Rudy Gobert.
Hmm.
He had the microphone to everyone. Okay, he said that everyone is overreacting. Okay, look at this. It's a tweet from me. What could go wrong? Okay, they are shaking millions of hands out there because it's election time, right?
Yep. Yep.
Okay, they can't snub people. They're thinking about elections, okay? And look at this. Look at this stadium here. Okay, he sent a warning. Okay, he did his job. Okay, now let's go on the road, right?
I think we should put on your collection also today. We have a long queue for the public transport in Jakarta.
Yeah, I was supposed to add a picture, but I couldn't find it. Okay, look at this. These are the teenagers. There's no school there, so they're to go to the party.
Yep.
Okay, so oh my God, that's why I think that this is going to be a crisis in the US. Okay, this one on the right, this is just Ohio. This is just one state. They estimate 100,000 people has 52 states, guys. 52. Okay,
Not good. I guess.
okay, and what's funny here is that you contrast what's happening in the US, how they don't care, how they're not concerned. But if you look what's happening in the Italy, Germany, it's already the healthcare system is already breaking down. Okay, the healthcare
Hmm.
system is already breaking down. See it. You can see it happening in other countries. Okay, but like if you go to here, the Philippines, like US, it's like it's like nothing's happening. They're moving too slow, right?
Yep.
This is Germany. Merkel said that, okay, this is the hard truth of what's happening. 2 out of 3 people can become infected. Okay? And this is really concerning, of course, especially for the people who are old people, right?
Yes.
Yeah.
For people who have compromised immune systems. Okay? Okay? Because a lot of people say, okay, I'm young, I won't be affected by this. Okay, but what about your parents? What about your grandparents? Okay, do we
Yeah.
forget about it? Right?
Mhm.
They carry it everywhere.
Okay, it's not like we're living on an island, right? Okay, so the worst case scenario here in the US is that it can infect up to 200 million people. It can kill more than 1 million people. Okay, globally, the worst case scenario is that it can infect 3 billion people. Okay, so even if the mortality rate is somewhere around 2 to 5%, my God, that's a lot of people, right?
Yep.
Yeah.
That's a lot of people. Okay, so this is really not an extinction event for us. I think throughout history, there's been a lot of global pandemics. Okay? Some of them have been very small, not disruptive. Okay? Some, like the bubonic, if you go back to the Black Plague before in Europe, it killed like half the population. Okay? So I think today, it's not really that deadly, but it's going to be very, very disruptive.
Yep.
Okay? Because it's infecting a lot of people. And that's why it's very, very disruptive. Social distancing is the key
Yeah.
to stopping the spread. But unfortunately, as we have seen, it has a huge economic cost, and that's why stock markets are collapsing.
Yes.
Okay, so this is from a study online. Okay, so I think it's really captures the what's happening today, right? Of course, it will cost something to reduce mobility, right? Because the world is very, very connected right now. Okay, but if you feel
Yeah.
so, it will eventually cost everything. I mean,
Mhm.
society is going to break down.
Yep.
Okay, so if not today, then one day in the future. Okay, so outbreaks are inevitable. Okay, but an appropriate precautionary response. Precautionary meaning you have to stay ahead of the curve. Okay, you have to be paranoid. You have to be ahead. Okay, can you take the same risk?
And
Okay,
people call me panicking.
those who panic, those are the ones that survive. Okay, it's like, okay, guys, where did this panic come from? It came from our ancestors. Okay, those who panic survive. Okay, if you're a caveman, the first sign of a tiger, you run away. Okay,
Yeah.
Yeah.
because if you don't run away at the first sign, the tiger runs very, very fast. It will eat you. Okay, so panicking is a evolutionary advantage. Okay, okay, it's better to be paranoid than to be eaten, right?
Yeah, that's for sure.
Okay, so this is one of those things, right? But of course, we haven't evolved the flight or fight response yet on the societal level. Okay, okay. So here's what I want to show to you guys that this is China. Look at this here.
Yep.
Okay,
So that.
when they start the lockdown, look immediately the number of cases are going down.
Yeah.
Okay, the effect is very, very fast.
Yeah.
Okay, so this is the true number of cases. This is the reported cases. But regardless, look at that. It immediately goes down. Okay, so lockdown, a complete lockdown is very, very important to stop the spread of this. Okay, so look at this. Okay, so this is a simulation. Okay, that if there's no social distancing, look at this. By day number 22, there can be 70,000 infected already. Okay, so after 2 months of no social distancing, this can be in the millions. Okay, so look at this. At day 31, 1 day of social distancing can decrease the number of cases by 40%. Okay, so at day, or the opposite, at day 30, if you wait 1 day more, there's 40% more cases. Okay, so this is exponential, guys. Exponential can move very, very fast.
Yeah.
So here, it's another model of daily new cases. Okay, so at day 22, day 24, look at it here. No social distancing. The daily number of cases is 30,000 a day. 30,000 a day, guys. So if
How many,
you,
how many people will die?
yeah, how many people are gonna die? Right? How many people are gonna die? Okay, the hospitals are gonna explode with this overload, overcapacity. Okay, okay. So here's what's gonna happen. So if this thing explodes higher, okay, the hospital healthcare system is gonna get overwhelmed. Okay, so if this is the capacity of the healthcare system, if there's no measures to stop the spread, social distancing, it's going to overwhelm the healthcare system and a lot of people are going to die. Okay? So if like the mortality rate in China, it's around 0.5 to 2%, it's still an estimate. It's around, maybe it's 0.5%. But remember, they were able to control the spread. Okay? So it did not overwhelm the healthcare system. Okay? If the healthcare system is overwhelmed, okay, the mortality rate can be 5 to 10%. 5 to 10% are gonna die. Okay? Okay, so I hope the numbers here are very clear, right? Okay, so there is no choice but to stop everything. Okay, there is no choice. Okay, so what this is gonna do is there's gonna be a global recession. Okay, so this is US GDP. They're forecasting a 5% contraction for the next quarter. So I think that this is gonna go beyond 1 quarter, maybe 2 to 3 quarters. Okay, and China is also forecast a 6% contraction in GDP. Okay, I'm pretty sure Europe is also going to be the same. Okay, so what we're going to see is like a huge global recession globally. Okay, so Indonesia, as we keep on repeating, is that it's more consumer oriented, not really dependent on exports. Okay, but Indonesia also needs to stop, right? Shut down everything. Okay, that's why there's going to be a slowdown also. Right?
We are still on denial stage at this time.
Okay. But yeah, I guess you can see it by the action of the market, right?
Yep.
Okay, I think that the slowdown, you can see it. Oil price just declined 60% this year. 60%. Okay. So what we're seeing really is the largest economic shock of our lifetimes. Okay, and the problem with this that it can trigger a credit crisis. What's that? It's when companies, everyone can't pay their debt. Okay, companies can't pay their debt. Okay, and this is a huge problem. Okay, for example, what can happen? Like for example, if you're a healthy bank, right, you have no problem. Okay, but if all your customers go bankrupt, then you also have a problem.
Yep.
Right?
Yeah.
Okay? Then that bank maybe borrowed from another bank, it goes default, then that other bank also has a problem. Okay? So it's all connected. That's why this credit crisis is really dangerous.
Mhm.
Okay? And the stock market collapses when there's a credit crisis. Okay? Because what happens when you can't pay? Okay, what do? You cut your spending, right? You save money.
Yep.
What do? You sell your car,
Mm.
sell your house, okay? Sell your stocks. Okay? So what happens in credit crisis? There's a forced liquidation of assets because people have to sell them. And that's why the stock market collapses. Okay? And of course, that's also where the opportunity comes from, right? Okay? So look at this. Okay? Globally, there is really a problem. Okay? Look at this. This is the amount of corporate bonds in the US. Okay? It's almost 8 trillion here. It's double the 2008 level. Double. Okay? And this is on the right is corporate bonds also in emerging markets. And this one is in dollars. Okay? It's almost 12 trillion, 12 trillion, guys. It's double the 2008 levels.
Mhm.
Okay?
Mm-hmm.
So globally, you see a huge amount of debt in corporates. Okay? And that's very dangerous, especially if you have something that's happening today. Everything stopped.
Yeah.
Okay? I mean, an example, we have us, Calum, canceled all our classes for the
Yeah.
first half of the year. Okay?
Yep.
So we have zero revenues for the first half of the year.
Yep.
Okay? So luckily we don't have debt, so we're okay, right?
Let's move to the online course.
Yeah, I mean, we're thinking of that, but I don't know. Okay? So luckily, Calum doesn't have any debt, so we're fine, right?
Yeah.
Okay? But that's not the case for companies around the world. If they have so much debt, what do you do when everything stops? You can't pay this. Okay? So fortunately, Indonesia is not one of this. Actually, the corporate debt of Indonesia is very, very low. I'll show you guys later. So the corporate debt to GDP of Indonesia is only 20%. Okay? In the US, it's almost 100%. 100%. Okay? In China,
My
I don't know,
goodness.
it's also very high. Okay? So what we're having here is really a credit crunch. Okay? Because you have easy money, right? It's very cheap to borrow, so people borrow a lot of money. Okay? Now suddenly, you have this coronavirus, it's called the black swan, right? Very, very improbable, but things happen. Okay, so now what do? Okay, companies suddenly have no cash flows. Okay, okay, and you're seeing the bonds collapse. So what is
I think
this?
I
Is
think
market.
right now for the companies they don't feel it yet.
Yeah,
Uh,
actually, the
think
company.
everybody is still focusing on how to survive at this time. How to right?
I think that Indonesian companies are healthy as a whole. Of course, you have a few that have a lot of debt, like Lipo, right? But as a whole, Indonesian companies have very strong balance sheets, so it's going to be okay. Okay, so this is more of outside of Indonesia. That's the problem, right? Okay, so like this is emerging market bonds, down almost 20%. Okay, this is US corporate bonds also, high yield bonds. So these are the more
My
speculative
goodness.
bonds. Okay, This is investment grade bonds in the US. Okay, so
Oh, yeah.
it's collapsing. Okay. Okay. So I think the problem now is that for the past 10 years, central banks have been able to save the market every single time. Okay. But
Mm.
today, I think it's a different scenario. Okay. As I said, uh, even if central banks make it free to borrow money, it won't solve the
Mm.
cash flow problems of companies. Why? Because everything stopped. Okay? Everything stopped.
Yeah.
Okay. So even if you give free money, you can borrow free money. I still don't have cash flows coming in. The store is closed. Okay.
Yeah.
If you give free money, it doesn't matter. Okay? It won't solve the problem. Okay. Disneyland is still closed. All the casinos in Macau are still closed. Okay. So it might be too little, too late to save the market. Okay. So we saw this in the past few days, right? Central bank, Fed cut rates to zero, launches QE again, 700 billion. ECB, okay, announces more stimulus, but here, look at this. They did not cut rates. Why? Because it's already zero in East Europe. There's no more room to cut.
Except it's going for minus. Yeah.
Okay? So this is their problem, guys. Look at this. The ECB interest rates have been at zero since 2016. Okay,
Oh
now
my
that
God.
there's a real crisis, there's no more room to cut rates.
Mhm.
Okay? The banks are already dying, collapsing in Europe. Why? Because zero rates, how can you make money? Okay?
Yeah.
Zero rates. Why am I gonna lend money? There is no return for me. Okay?
Mhm.
That's why zero rates don't work. That's the limit. Okay? The Fed cut, it's already 0.25%. That's why you're seeing also the banks are collapsing in the US. Okay?
Mhm.
Okay? So what's the next thing? How do you prevent a collapse now? I think uh, I think we're gonna see a more than 50% chance that we might close the market for the next few weeks. I don't know. Okay.
Hmm.
Okay. So if you look at the market today, Europe is down another 8%. I think the US is gonna open at down 9%. So this is after the Fed cut rates, right? So as you can
Mm.
see, it's not working anymore. Okay, and I think that the markets are afraid that there's no more gas in the tank. Okay,
Mhm.
Fed funds almost zero, ECB zero. Okay, and that's why I think the market is down.
Mm.
Okay, so look at this. So this is in 2008. The Fed also wasn't able to stop the market from collapsing. Okay, so yes, 9 times out of 10, central banks can save the market, but there is that 1 time out of 10, and this might be it.
Hmm.
Okay, so I'm sorry, guys. That's just what I see globally. Okay, but as I said,
Yes.
this is going to be a once in a lifetime opportunity.
Yes.
Okay, once in a lifetime, I tell you. Okay, global pandemic on this scale last happened 1918 is Spanish flu. Okay,
Mm.
where it infected, I think 27% of the global population. 27%.
Mm.
Okay, killed between 50 and 100 million people around the world. Okay, so I think that these what you call black swan, very rare events,
Yep.
happen once in a lifetime. Okay,
Yeah.
Okay, so I think Indonesia is gonna suffer from a recession, but unlike the world, there's gonna be no credit crisis. Okay, one, Indonesia has very low debt levels. Government, I think it's around 30% debt to GDP. Very low.
Mm.
Okay. Look at US, almost 100%. Look at Japan, 244%. Okay. Household debt to GDP of Indonesia is also very low, 19%. Okay. Corporate, around 20, very low. Okay.
Mm.
Okay. So what's gonna happen is what you call contagion.
Yep.
Okay? Contagion.
Mm.
Okay. What's that? It's when global markets out there is panicking, so they also sell Indonesian stocks and bonds. Okay.
Mm.
Okay. So I think that now Indonesia has to act very, very fast now. As I said in a few slides before, every day you wait, there's a huge increase in the number of infected. Okay?
Mm.
Okay, so this is what I'm talking about. What is 23% Indonesia's corporate debt to GDP? Okay?
Mm.
So it's the orange here, meaning it's one of the lowest in the world. Right? Look at that. Everyone else has a lot of debt. They're the ones that have a problem. Okay? Okay, so here, this next chart is the contagion I'm talking about. So this is 12 years. This white line is US. This one is Indonesia. Look at that. Look at what happened in 2008. Okay, there was a crisis in the US, but Indonesian stocks fell more. Okay,
Yep.
the crisis was in the US, not in Indonesia. Okay,
Mm.
so look at here 2015 also. This was a time when the global markets were very weak. People were scared of China.
Mhm.
Indonesia also went down. Okay, this today. Okay, US market fell 27%. Indonesia also fell down. Okay, so what we're seeing is really contagion. Okay, this happens when the global markets investors are very, very scared. Okay,
Mm.
okay, and we're seeing the rupiah depreciate 10% just already this year. Okay, that's the contagion effect. Okay, because you're seeing capital flight outside of Asian countries.
Mm.
Okay, so if you look at the underlying stocks in Indonesia, so I updated this table.
Mhm.
Everything has been destroyed. Okay, there's only 3 stocks that are not 20% or more down from their 52-week highs. Only 3. Even the big banks have started to go down, like BBCA, BBRI, BMRI, and now more than 20%. Okay, and if you look at this, 90% is 30% or more from the 52-week high.
Mhm.
Okay, so this is incredible. Okay,
Mm.
okay. I think that valuation of actually of the Indonesian market is extremely cheap already. Okay, look at this, 11.5 times PE. The last time it reached this number was in 2009. So we are at a 11-year low in terms of valuation.
Mm.
Okay, so I think that as an investor, now is the time to be buying. Cost averaging, guys, is very cheap. But okay, uh, please, I just want to clarify. Now is a good time to buy, but it doesn't mean it's gonna go up today. Because as I said, people
Yeah.
are very scared. Okay, but it's a good time to be buying. It's a good environment to be buying. Why? Because everyone is so bearish already. Everyone's panicking. Okay, so as an investor, you want to be accumulating stocks in this environment when everybody is selling. Okay, so I give you guys homework. Search for Warren Buffett. He is starting to buy already.
Mm.
Okay, he waited so many years to start buying. Okay, he has 120 billion in cash.
Mhm.
120 billion. Okay. So in the past few years, he has not bought anything because everything is expensive. Okay, but now everything is collapsing. He is starting to buy. Okay, so what you want to do is to uh, cost average, slowly buy, divide your buying, so you don't get scared of this. Okay, as a trader, everything is exploding. You don't want to get join the no, join the nuclear bomb. Okay, because everything is so volatile. Okay, you want to wait. Okay. Okay. So okay, this is what I mean. It's called a sensitivity table. Okay, because there's so much uncertainty. Okay. So what I see is that if you assume that the market should be trading at the average at 14.6 times PE, okay, what's the market now? I think it's around 4 or 5, right?
Yeah.
4 or 5?
Mhm.
Okay, it means that the market is already expecting 15-20% decline in earnings. Okay, that's what I'm telling you guys, that everything is already extremely bearish. Okay, so even if the earnings decline 15-20% for the next few years, that's already what people are expecting. Okay, means that people are extremely bearish already. Okay. Uh, okay. So I just want to summarize. Okay. Okay. This is not a unique situation. Yes, it's extremely rare, but global pandemics have occurred for hundreds of years. Hundreds of years. Okay. Some are not disruptive. Okay. But coronavirus is not one of them. Okay.
Hmm.
Some are very disruptive. Okay, like the bubonic plague in the Middle Ages wiped out half the European population. Some are not, like SARS, right? It only took around 6 months to take it under control, but I don't think coronavirus is one of them. Okay, this one is huge. It's infecting a lot of people, not killing a lot of them, but infecting a lot of them. Okay, and the world is not prepared. Okay,
Yeah.
so we're facing one of the largest economic shocks in history. Okay, and as I said, this could trigger a credit crisis, okay, among other crises. Okay, like health, humanitarian, political. Okay, so in the grand scheme of things, market crashes are actually, if you look at long enough in the stock market, it's very normal. Okay, so I would say that the really big runs, like 40-50% down, they happen once every 10 to 15 years. Okay, small ones like down 10 to 20%, they happen once every 1 to 2 years, right? So without these crashes, how do we get bargains, right?
Yes.
Okay, so this is really needed to enhance return for long-term investors. Okay, so I think that what this crisis is going to do is going to open up really an opportunity of a lifetime. Okay, opportunity of a lifetime. If you think about it, this happens once every 10 years. Okay, pandemics happen what? Global pandemics one every 100 years. A really big one. Okay,
Yeah. The Spanish flu actually 100 years, I think, around 100 years
oh
from.
right. And the last one that's very very big was the bubonic plague, 300 400 years ago, right?
Yep.
Okay, so I think that for investors, now is the time to be accumulating stocks. Okay, okay. Do not buy all at once. Trust me, you will be very very scared of this. Okay, set aside what you can set aside. Okay, hopefully money that you don't need for the next 5 to 10 years. Okay, cost average. Okay, stick to large caps. Okay, or you can also buy an LQ45 index fund. Okay, let's see. We're gonna look for one for you guys. Okay. So for those who are chose to be traders, now is not the time. Okay, now is not the time. Trust me. Okay, stay in cash. Okay, because the market is too chaotic to trade. Everything's too chaotic. Okay.